Welcome to Ask Fear and Greed, where we take your questions and do our best to answer them. I'm Michael Thompson, and good afternoon, Sean Aylmer.
Good afternoon, Michael.
Sean, our question today comes from Paul. He sent it in via the website. He went to fearandgreed.com.au and sent his question in. You can go to any of the social media platforms, LinkedIn, Instagram, Facebook, if you have your own question to add. But Paul says, "Hi guys, I'm a daily listener. Really enjoy the show and the interview each morning. I have a question for Ask Fear and Greed about ETFs." He says, how much of the overall market is owned by ETFs? And as they become more popular, will they reach a point where they are driving the share price of individual companies either up or down? Sean, over to you.
Right. So let's define an ETF, an exchange-traded fund. It's basically a basket of securities that tracks something, like the ASX 200, or tries to outperform something. It's a managed fund that you can buy and sell on the exchange. When you invest in an ETF, you don't actually own the underlying investments. You own units in the ETF, and the ETF providers own the shares and assets. So that's what an ETF is. There are now more than 200 exchange-traded funds on the ASX. They track equities, large, mid, small caps, overseas markets, US, UK, Japan, China, India, Asia, Europe. They track infrastructure, property, currencies, fixed income, all sorts of things. The question from Paul, though, relates to the impact ETFs have on equities. So the short answer is I'm not 100% sure.
All right, there we go. Thanks very much, Paul. For your... just kidding. Go on.
But the evidence suggests that they don't have much of an impact. Now, a passive ETF, which is one that you say, I want to buy the ASX 200, for example. So the provider of that product buys the proportion of Commonwealth Bank shares that makes up the ASX 200 and the proportion of BHP shares and CSL shares, et cetera, et cetera. So they're actually buying the proportion in line with the index. So that should have literally zero effect on it. Of course, there are a bunch of others that might say, I want to have an ETF mining stocks or banking stocks or a bunch of other things. So that you would think would theoretically have some sort of impact encouraging buying or selling of certain stocks. According to BlackRock, which is a huge fund manager out of the US, from the period of December 2020 to December 2022, approximately 5.6% of equities trading volume in the US on Wall Street was attributable to ETF activity. 5.6% is not very much. In other regions, the numbers were lower. In Europe, just 1.9% of trading in individual European stocks was attributable to ETF flows. In Asia Pacific, this figure is even lower at 1.4%. So I get that ETF activity has probably risen in recent years. I don't doubt that. But even we're talking 18 months ago, the figure was about 1.4%. That's not going to move markets very much. So even if it doubled in that 18 months, and I don't think it has doubled, but let's say it has, 1.4 plus 1.4, 2.8%, Michael, let's call it 3%. It's probably not going to make a significant difference to the market. So, Paul, excellent question. I can't give you a definitive answer on it, but the evidence points to the idea that ETFs won't drive individual companies' share prices either up or down.
At least not for many, many, many years at that growth rate.
Yes. What do you mean by that?
Well, if it's been at kind of, 1.4% now in Australia and say, what did you say in the US? 5.6% there, and presumably it has grown in the last few years.
Yes, okay, yes. So if we all jump into ETFs, right? Now, interestingly about ETFs is it used to be about passive investing. So I want to invest in a bunch of mining stocks. So you just got a bunch of mining stocks in proportion to the mining index, the ASX 200. Much more popular now are active ETFs where they actually try and outperform certain things. And ETFs have shifted from being I don't know the breakdown, but certainly more active ETFs than there used to be. So your point there, Michael, is if people continue to use ETFs and particularly put money into active ETFs, well, they are more likely to impact share prices than passive ETFs.
Yeah, that was exactly the point I was trying to make there, Sean. Thank you for very cleverly identifying the point somewhere within what I said. Thank you very much, Paul, for the question. That was a cracker. So do what Paul did. If you've got your own question, head along to fearandgreed.com.au and send it in via the website, or go to Facebook, LinkedIn, Instagram, any of the social media platforms and send it on through there, and we shall get it, have a look at it, pop it on the list, and Sean will tackle it one day, and I'll add it's not even 2 cents worth. It's like half of 1 cent, really, that I add to it, but it is a valuable contribution. Thanks, Sean.
Thank you, Michael. Thank you, Paul.
I'm Michael Thompson, and this is Ask Fear and Greed.